Have you heard the joke where these two fish meet up? They are swimming in the opposite direction, but they're kind of both in the same neighborhood and they know each other. And the one fish says to the other fish, "Hey, how's the water?" And the other fish goes, "What's water?" The point is that when you don't notice what's all around you, it can become invisible. And for people who have never traveled outside of their country, they don't know that there's something other than their current currency or their local currency. Growing up in the Midwest, I've been around a lot of people who have not only not left the Midwest, but have not left the borders of the United States. So they have no idea what water is. They have no idea what the US dollar really is. They don't get that the US dollar fluctuates against other currencies on this planet. And how could they if they're not going to England or France or maybe even Canada or Mexico? They don't get the idea that there's all these different currencies and these currencies go up and down. And when they move, and there's big moves in currencies from time to time, the last time I remember a really, really big move was in 1985. My dad was traveling to Japan, and all of a sudden, his dollar did not buy as many Japanese yen, and that really affected his business there. So, you know, this currency thing can have really big implications to all of us, especially when the equivalent of the Fed or the central bank behind that currency is kind of in a dangerous spot, and they really need to do something to protect and to boost their local economy. And that is actually what's going on right now, and it's having some pretty big waves across the investment world. And it's something that I think we should take a look at. So thinking back to the two fish, this conversation is really about, hey, how's the water? Hey everybody, this is RC Peck, and this is my weekend podcast. And the theme for this weekend is, who's the US dollar hurting the most? Right, so when I say who, maybe it doesn't necessarily have to be a person, but what companies is it hurting? What sectors is it hurting? And yes, what investors is it hurting? And what's really interesting about what's going on with the US dollar right now is it's in a really strong position. It has been moving up, but that's not the interesting part. The interesting part is that it's at a major decision point right now. And if you look at the screen here, this is a price chart of the US dollar going back to about mid-2000. And in 2001, 2002, it had a double top, and it started falling all the way until 2008 when everyone thought the world was ending. And then it's basically been going sideways. Well, it went up since 2008, but it's been going sideways for the last decade. The red line on this screen is a 200-week moving average. So this gives the visual person, the 3D thinker, a really good image to look at to say, hey, which direction is the US dollar going? And as you can tell from 2003 to really 2012, that 200-week moving average had been falling. But in 2011, at the very end of 2011, that 200-week moving average started moving, well, it didn't fall anymore, and it was slightly moving higher. And that's actually what's been happening. If you look at 2012 and 2013, those closing prices of the US dollar, you can see that that weekly closing price of the US dollar was really kind of sitting on top of that 200-week moving average, and then it really moved up. But what's really amazing about this chart, or important, is this line right here, the lowest horizontal line. That is a 38% Fibonacci retracement line from the very peak of 2002 to the very low of 2008. The retracement of that fall is this line right there. And now I'm just showing you the closing price on this price chart, but if I showed you the intra-week price, you'd see kind of tails falling and lines going up. It would be a lot messier to look at, but what you're looking at is just the closing price of the US dollar over the last, well, since 2000, mid-2000. So the US dollar has broken above this point is coming up to this point, and really it's really moving up against a 38% retracement line. So it doesn't need to go exactly there. It can stop short, it can go slightly higher, but it's at a major really turning point, especially, and I did not put it on this chart because there'd be too many horizontal lines, but it's already within its decision-making range from the low to the high. Usually a range is not just one point, but it's kind of a general area. So, it would turn between somewhere between 90 and 92, for example, on this chart. But the US dollar is at a decision-making point, and look at this move up. I mean, that's a huge move up, and you can tell moves like this in currencies, certainly in the US dollar, is actually quite common. You see it here in 2009, you see it here in 2008, you see it here in 2005. So sharp moves up and sharp moves down happens much more than people think in currencies. Now the question is, who is this affecting? It's affecting oil. It's affecting the oil sector, the energy sector. Now look at this price chart. This price chart goes back to 2003. And I would show you it farther back, but I didn't have that data. The oil, this is West Texas Intermediate crude, but notice how oil is coming close to its upper trending line. This support line that's been trending up since 2003 stopped the fall in 2008, and it's right around that 65-ish price point. Now, if oil breaks below this, or more importantly, if the US dollar hits that 38% retracement line and keeps going higher to the 50% retracement line, then the probability of oil falling is very high. And the next major place oil would fall is about $35 a barrel. Right now, say oil is generally about $65, so oil could fall another $35. It's happened before, it can happen again. The general price of oil in the world for West Texas Intermediate crude is somewhere around $75. But it's such a volatile commodity, the most traded commodity in the world, you can pretty much add $35 to that price and subtract $35 to that price, to that $75 price, to basically get what this thing can swing. Right, so it can go as high as 110, it can go as low as 40, and that's what it's done historically. So what the dollar does next, and we're kind of waiting to see, is it going to break up and out and keep moving higher? Certainly the Japanese central bank wants it to do that by its printing, but it is absolutely, the dollar's move up has absolutely hurt the oil and energy sector. Now the good news is, once this does finally settle out and bottom, there'll be some opportunities to move into some world-class energy companies at a very discounted price. The other area that the US dollar move up is affecting is gold. Now on this price chart of gold goes back to the year 2000. The red line on this price chart is the 200-week moving average. You can see that that has flattened out in 2014. It was flattening out in 2013. And those two parallel lines near the top of the price chart is about 1180 gold, so $1,180 per ounce of gold. And gold is really bouncing around trying to figure out which direction. Now this price chart doesn't show you, but it's within those two lines because this price chart is so zoomed out. But it's actually within those two lines, really trying to figure out which way it should move. If the dollar does move up, then gold has an extremely high probability of moving down, and the next major support gold will hit is the $1,000 mark, which would be a complete clean out for the gold sector. So energy is going to be affected, has already been affected by the price move up, so has gold. Now, here's the thing. Here's a commodity right here, corn and wheat, that has not been affected as badly as you'd think by the move up in the dollar. Now, this is a price chart of agricultural commodities. The ticker symbol is JJG, and this goes back to the very beginning of 2007. And as you can see, JJG hit a triple bottom, the same price. Again, it's hard to see on this weekly, but it did hit the same price it hit back in 2008 and 2010. And agricultural commodities have not been affected, specifically corn, wheat, soybean, have not been affected like energy and precious metals. So when you see something moving in its own direction that is very powerful and has moved off that bottom and has continued to move up, and this ticker symbol I bought for my money management and private clients because I saw that triple bottom. So the takeaway, what is the takeaway from what the US dollar is doing, what's happening to energy, what's happening to gold? The takeaway is the US dollar is now in control. It is control of what happens in the energy sector, and it's in control of what happens to the gold sector right now. And its next move has big implications for anyone who has exposure to energy or precious metals. So what I'm going to do is continue to watch that and keep you updated and look for opportunities to protect and grow our money. Hey everybody, this is RC Peck, and really this is just another step in helping you secure your future and your portfolio.